Markets can be unpredictable. 1 minute, everything is tumbling, and the next, we're riding a rally. So here's the big question. Are we on the verge of another breakout, or is this just the pause before a deeper pullback? Back at the start of September, we saw key technical levels being tested, especially on the NASDAQ and S&P 500. The NASDAQ, or QQQ, hit its 200-day moving average, with RSI approaching oversold on the daily charts. The S&P 500 was testing its 100-day moving average at the same time. For us, that was a clear sign. It was time to go long, and we did, picking up several swing trades and day trades along the way, accumulating profits. Before diving into our trades, let's take a broader look at the market. Bitcoin has been struggling to break through its 200-day moving average, finding resistance right at that level. As of now, we expect this resistance to hold, potentially causing more consolidation in the short term. Gold is telling a different story. It's been surging, breaking out to all-time highs. This type of bullish action in gold usually signals something bigger, perhaps uncertainty around inflation or future market conditions, and that brings us to the bigger picture. The Fed cut rates by 0.5% this week, sparking a rally on Thursday. It seems like the market is pricing in more accommodative prices, and with the dollar weakening, it's no surprise that gold is running. Meanwhile, tech stocks have found renewed momentum as investors are hopeful for an economic soft landing. Let's talk about Friday's day trades. Both the SPX and NDX triggered long entries early in the session. SPX and NDX both continued higher, reaching target 2. At this point, another third of the position should have been taken off, locking in even more profit as the trade continued to unfold. Finally, both trades hit target 3. And the best part, they didn't come close to revisiting the entry point, which means anyone who managed to trade well was sitting in profit the entire time. So, wrapping up the week, we had 1 win on Thursday and 2 solid wins on Friday. All 3 trades hit their targets, keeping us at a 95% win rate for the month, with over $1,000 in raw points of profit per contract day traded. Now let's get into the swing trades. First up, Google. We've seen a solid pop since our post, and now we're sitting nicely above support at $160. Our next target to the upside is $174, and if the market remains strong, we expect to hit that in the coming weeks. Tesla is next. It's been one of our strongest trades recently, with the stock moving up 13% since entry. We're targeting $269, and we have support below at $218 and $210. Tesla has been riding this bullish wave, and with its recent focus on AI and robotics, we could see more upside, especially if Elon Musk's bold bets continue to pay off. UPS was a classic divergence play for us. Price was making lower lows while both the PPO and RSI were making higher lows. That type of setup often signals a reversal. Price has consolidated since our entry, almost hitting our T1 target before reversing somewhat. At this point, it's all about management. If you took profit, well done. If not, now you're faced with the decision. Cut the trade or hold for a potential move back up, but only as long as price doesn't drop too far below our entry. Next up, Amazon. We went long when it hit the 200-day moving average, and since then, we're up over 10%. Right now, we're sitting above support at $188, backtesting the uptrend line. The next major target is $200, and if this uptrend holds, we should see that level tested soon. Microsoft has had a fantastic run too. We're up 8% from our entry, with support at $432. It's now in striking distance of all-time highs, and with tech stocks showing strength, we expect a test of those highs shortly. And finally, Intel. This week, the stock has been a bit more volatile, but for good reason. Intel secured a huge win from the Biden administration with a $3 billion award to expand semiconductor manufacturing for the US military. Add that to the $8.5 billion grant from the CHIPS Act, and this is a big victory for domestic chip production. We expect Intel to be volatile, but this news puts us in a good position for the long term. So where do we go from here? The S&P 500 is at all-time highs, and we expect this push to continue. That's going to be great for our swing trades and long-term investments, especially in ETFs like QQQ and SPY that track the broader market and tech sector. The tech rally seems far from over, especially with the Fed's recent rate cut. As for other opportunities, Bitcoin's 200-day moving average is a key resistance level we'll be watching closely, but for now, we expect it to hold. With the recent rate cut and uncertainty surrounding inflation, gold has been on a tear, and we expect to see more upside potential. As always, it's about staying ahead of the market. The setups are there and the opportunities are plenty, whether you're day trading or swing trading. Thanks for watching.